Our first panel session today is on how are Asian economies embracing and encouraging a renewed focus on corporate sustainability in a very challenging and unexpected 2020. The panelists for this session are Ms. Sharifatul Haniza Said Ali, Executive Director, Islamic Capital Market Securities Commission, Malaysia. We also have with us Ms. Grace Hui, Managing Director, Head of Green and Sustainable Finance, Markets Division, Hong Kong Exchanges and Clearing, Mr. Satoshi Ikeda, Chief Sustainable Finance Officer, Japan Financial Services Agency. And moderating this session, we have Mr. Mushtaq Kapasi, Managing Director and Chief Representative, Asia Pacific International Capital Markets Association. Over to you, Mr. Mushtaq.
I'm Mushtaq Kapasi from ICMA. Very delighted to be here. Thanks for the invitation to this very high-level conference, and I'm delighted to be here with a very esteemed panel of experts on ESG. So today's panel will be speaking about sustainable finance ecosystems in various countries around ASEAN. And this session will provide a view of current and upcoming initiatives intended to further enhance corporate sustainability within Asia. And I think one great thing about this panel is that we have representatives from a few different countries to give a very regional view from Malaysia, from Hong Kong, and from Japan. So let's get right into the discussion. And before we start out, I think it's probably useful to dispel some of the confusion about ESG. It's quite a broad term, and I think it can be quite vague sometimes. So I'd like to start by asking each of the panelists, how exactly do you define corporate sustainability? What in practice, in pragmatic terms, does this mean for your organization, and how do you measure it? So perhaps I can start out with Ms. Sharifatul.
Hi, morning Mushtaq.
Good morning.
Thank you for the opportunity to be here, and I think this is also my honor to be in the company of various esteemed panelists. First of all, I think before I answer that question, how do you define corporate sustainability? I think I just also want to share with you that Malaysian corporates have made significant strides in meeting this agenda, and I think that's been the work of various stakeholders like Bursa and SC. I think this is about being good corporate citizens, and I think I also shared this with you earlier in a conversation that for me, the conversation I'd like to take you through for this is a little bit different because I'm coming from an Islamic capital market perspective, and therefore from an Islamic finance and Islamic corporate, capital market perspective, I think it's about doing good and continuing that good and making sure that it is based on a principle where we call inspired by Maqasid Sharia, where it's actually taking care of 5 different elements. And I think those are the tenets of making sure corporate sustainability is underlying the value propositions. I think the 5 essentials of human well-being is key, and for Islamic capital markets, it's about taking care of life, intellect, property, lineage, and because it's Islamic capital market, naturally it's faith-based. That's just a quick intro, Mushtaq. I will share the broader perspectives from the capital market per se as we take through the conversation.
Okay, sure. Thank you. Okay, so Ms. Hui from Hong Kong, you have a different perspective because you work for an exchange, very important market infrastructure that is now much more focused on sustainability than it has been in the past. So, how do you define corporate sustainability, and how does that translate into your organization and to an exchange?
Thank you, Mushtaq, for the question. But first of all, let me thank you, Capital Markets Malaysia, for having me on the panel. And I'm so privileged to be here with the panelists. From my perspective, rather than before HKEX, corporate sustainability is all about balancing economic objectives, such as profit, with the welfare of the communities in which the organization operates and protecting the environment. At HKEX, this is broadly defined in our purpose, which is to promote and progress our financial markets and the communities they support for the prosperity of all. As you know, we are both a market regulator as well as an exchange operator. So it is our mandate and obligation to ensure that there is a sustainable development of a fair, orderly, and informed financial markets. As a listed entity and also a corporate citizen, we are fully aware of our role to lead by example. So we continue to develop ESG guide for all listed companies, and also we also comply with the guide over and above what is required.
Actually, that's quite an interesting perspective because you yourself, in some ways, supervise and run the market. So you have a role to play in ensuring that market participants and corporates are sustainable. But you yourself are a listed company, and so there's an internal aspect to that as well, and you have to lead by example, I suppose. Okay, so Satoshi-san, please give us your perspective as well. Again, slightly different perspective, not only from a different jurisdiction, Japan, but also from a more supervisory role. And Japan, I think, has had a very long experience, actually, with some of these issues, particularly stewardship. So please offer your perspectives there. Thank you.
Thank you, Mushtaq. And well, first of all, I'd like to say that I'm very much honored to be invited to this seminar. And I also, in advance, apologize that I have to leave earlier than it finishes around, 10:30 Malaysian time. Well, as the Mushtaq pointed out, I'm from the financial supervisors, and I'm from the capital regulators in Japan, Japan Financial Services Agency. And so, I believe that at the core of the definition of the corporate sustainability, there is a certain risk element. It really relates with the ultimately the survival of the corporate or survival of the banks or financial institutions. Addressing the sustainability of the environment and sustainability of the people itself doing good. But it has other elements. By addressing those sustainability issues, corporates or financial institutions are preparing for the protecting themselves from the certain bad consequences from not addressing those sustainability issues like climate change or the human rights issues. In the end, we are living in the world that where those sustainability issues feed back into the business prospect, and so it is very much the key that the corporate sustainability and the sustainability of the environment of people go hand in hand, so that we create a shared value, and by that protecting the financial market and financial stability. That's the perspective from the Japan FSA.
Okay, thank you, Satoshi-san. And I think it's really interesting to hear, actually, this panel is great because you're hearing really interesting perspectives on why sustainability so far. And in my experience, the reasons for corporate sustainability actually come from somewhat different directions, depending on which stakeholder you're talking about. So Ms. Shari Fatul talked about very basic societal principles, from Islamic ethics. Grace alluded to more kind of corporate ethics and sustainability. And Satoshi-san, you're talking in a very pragmatic way, actually, about systemic risk and looking at the overall long-term health, economic health, and financial health of the market. So I think all of these are relevant, and hopefully we'll have time to get into these a bit more. But before we do, let's get a bit more pragmatic now. And I'd be very interested to hear, again, different perspectives from the panelists on how you have seen the sustainable finance market develop in Asia over the last few years. So you can focus on your own jurisdiction. Of course, you'll have your own specialties, but we're thinking about sustainability standards, issuance trends, market development, new products, things like that. What are the important themes to you? And again, I think we'll go in the same order, starting with Ms. Sharifatul, please.
Well, this was with the clockwise version, isn't it? Okay.
We'll mix it up a little later.
I'll take this on. Yeah, no worries, no worries. I think just to give some context to it again from the question you asked earlier, Mushtaq, on the corporate sustainability, and I bring it back to the space of Islamic capital markets. Often when we hear about ESG or corporate sustainability, and we talk about SRI, the three pillars. How do we meet the needs of present without compromising the ability of future generations to meet it? We often hear the people, planet, profit phrase, right? And I think for Malaysia, SC Malaysia, I think that recognition has been even as early as 2011 in our capital market master plan. We had recognized that social and environmental issues needed to be given greater prominence in corporate decision-making process. And that's where that momentum has continued in terms of trends. And for Malaysia, I think when you marry both Islamic finance and the bigger conventional space as a global leader for Islamic finance, we had shifted that engagement between the SC Malaysia and Bursa in always working to how do you complement the existing comprehensive framework that we already have, but then ensure that you're doing it with that sustainability in mind. And that's why if you look at for Malaysia, I think how we created that culture was on a basis of symbiotic relationship. We had to work together with the corporate citizens. And for the trends, I think where Malaysia has come from, we've had several adoptions and approaches where for Islamic capital markets, we started out with negative screening for the companies, and that was then something that if you look at negative screening, this is about exclusion of companies undertaking certain business activities. So we started that out from a sustainability approach for the Islamic capital market. On the broad basis, we had developments like sustainability disclosure coming in even in 2016. And that has been on a staggered basis until now, where companies actually have to publish sustainability statements and providing narratives on whether it's in their business strategy or in their activities. And we find that shift actually in sustainability disclosure being a trend where right now, I think more than 3/4 have already adopted that reporting, but not, I think probably under a third are actually incorporating that in the business strategy and sharing that with the stakeholders. So that's still work in progress, obviously, to be more granular in strategy, but disclosure wise, we are already there. We also had, I think, issued in 2000, as far back as 2000, where in our Malaysian Code on Corporate Governance, we already prescribed minimum requirements, and that moved to a monitor that was released in 2019, where we talk about levels of adoption of different standards in this particular area, and where we talked about promoting gender diversity, we talked about shareholder activism, all relating to the entire agenda of sustainability. We also had developments even as far back as 5 years ago where we had indices measuring this in terms of performance of public companies, where how do they demonstrate ESG practices. So I think there's been various initiatives that has been put into place as far back as 20 years, 15 and 5 years. So that momentum has built up. So I would say for the Malaysian jurisdiction, from baby steps even as far back as 20,000 in terms of recognition, we have now come to a point where clearly frameworks are there to enable and facilitate corporate citizens to undertake it. It's more about embracing it. And I think what happened with COVID-19 pandemic, that realization came to the forefront. Because not only lives were lost, livelihoods were lost. And that brought also the recognition how important the planet profit and the need to actually meet the SDG aspirations. Because in SDG aspirations, you will see that a lot of it has been climate based. Obviously, the initiating of it, and that concern still remains very strong. But now, where the SDGs, for example, where you talk about poverty, you talk about inclusiveness, that has come up just as strong. So I think these are developments and trends you slowly see coming on board because, for example, in Malaysia, from where we have been strong advocates of climate related activities, and we looked at how funding was required to facilitate that. We had established in 2014 an SRI Sukuk framework, and that SRI Sukuk framework was actually to look at funding of natural resources, renewable energy, energy efficiency projects. But there were elements in there that didn't come up strong until the last couple of years. For example, development of wakaf properties, endowment for the societal good. I mean, it was there, but it didn't get picked up yet in terms of focus by the corporate players. In 2017, we looked at launching the world's first green sukuk. And that was, I think, a piece of pride for us, where we actually had a corporate raising 250 million ringgit to finance solar project in Sabah, and this was under our Sukuk framework. And then in 2017, we pushed that agenda further. We pushed that agenda further by establishing guidelines on SRI funds, because we wanted that buy-in, that embracing of it by investors, by investment managers. But I think where I said earlier just now, where this year's sustainability agenda has taken on a profound significance, where social impact issues came to the forefront. So we are proud to actually say that last couple of weeks ago, we've also now broadened to encourage the use of wakaf to raise more funds and see the inclusiveness of that and direct that to the societal good. So we issued out a wakaf featured fund framework a couple of weeks back to allow collective investment schemes, mutual funds, unit trusts to be structured for that good. And I know I hope I'm not taking up too much time, but I think there's also a bit of space there that we want to be, we're also proud to share this with you. I mean, more developments will come up. We hope to marry ESG and Sharia compliance screening now, where we're going to be putting that out. And I think with that, the aspiration of continuing to be that leader in the innovation for Islamic space, but marrying it with sustainability, because there's so much commonalities between Islamic and SRI. Tremendous, and that's where I alluded to Maqasid Sharia earlier in the start, and that's about it for now.
Okay, thank you. Just jam-packed with useful information and a few interesting themes in there. At least one of which I'd like to come back to in a second. Right. So first of all, you mentioned you mentioned the shift from more environmental considerations to a greater focus on larger social and even SDGs, sustainability themes. And Islamic finance, in a way, was way ahead of its time. You've been working on these themes for 20 years, and the market seems to be waking up largely during the pandemic to social bots. So that's one thing. Secondly, you mentioned disclosure requirements and increased guidelines for that, which is a big theme that we're seeing globally, at least from ICMA, and I think Grace is going to be able to comment on that as well. And then you also talked about the commonalities between Islamic finance and overall kind of traditional global ESG considerations. And so I think that's actually quite a useful theme. And if we have time, I'd love to get back into that. But I do want to give the other panelists some time to give their market views and trends. So let me go to Grace now. And if you could tell us from your perspective in Hong Kong, and I'd say more market focused, what are you seeing in the market? And what are you seeing as the actual opportunities for, frankly, the private sector in this space?
Thank you. At HKEX, we are seeing a growing interest in green bonds, social bonds issuances. As at the end of September, we already have surpassed the total amount issued last year. So we were at around $27.6 billion US as at the end of September. So I think the private listed companies are already seeing the benefits of issuing green bonds and transition bonds. And we are also seeing interest in listing applications in relation to ESG themed ETFs. So we are getting kind of inquiries from that perspective. For Hong Kong, the other trend we are seeing is that the availability of ESG ratings. The rising trend of benchmark providers and rating agencies publishing ESG ratings of our listed companies. Most of the time, these are unsolicited ESG ratings. So I'm getting calls from people trying to understand, why they're being rated, and some actually have unpleasant surprise as to why they've got such low rating, and so they wanted to know how they can improve. So actually, I do see the benefit of publishing ESG ratings. So at least we're getting the attention from the top executives that now want to do better in terms of ESG. So to help them to do better ESG, what we have done at the exchange is that we have recently upgraded our ESG guide to have mandatory disclosure in terms of how the board is involved in considering ESG issues, and how they have incorporated ESG risks and opportunities into the overall corporate strategy. The reason why we wanted the board to be involved is that, as you know, in the ESG reporting is not new, but whenever we do a sample check on the ESG reports, we have seen a lot of plain statements and maybe cut and paste even, and disclosing things that are not material. So we think that it is important that it's no longer a tick the box exercise, and that the board should be fully involved in consideration of ESG issues. So the latest amendment includes that mandatory disclosure. We also have upgraded our social KPIs to now comply or explain. Before, it was a recommended best practice disclosure, but we think that social KPIs should not lag behind environmental KPIs. We believe social KPIs are equally important, as demonstrated by the pandemic. The other thing we have included in our guide is the climate risk disclosure, pretty much following TCFD practices. So I think where we're going is we're seeing more demand for ESG data, hence the upgrade of our ESG guide, and for more disclosure around social and on climate. So I think I'll leave it as that, Mushtaq, and I'll give Japan.
Okay, thanks.
Yeah.
And you touched upon a couple of themes that I'm also seeing, I think, which are very important. One is that sustainable finance has gone far beyond just green bonds and a couple of Islamic structures, right? It's an entire ecosystem, and that includes rating agencies, that includes all sorts of service providers. And the second theme that we're seeing, especially this year, is the importance of data. So we're really seeing a focus on data in terms of getting the right measurements, getting the right impact. It's not only enough now just to say you're green or not green. What's important to investors, and I think to regulators as well, is quantifying that in order to make good decisions about risk and about impact. So Satoshi-san, I know you have to leave soon. So if you don't mind, I'm gonna pose you a three-part question and see how far you get.
Okay.
So the first part of the question would be the same that I posed to the other panelists, just giving your sense of the trends and the latest developments in sustainable finance. Then we also have a question from the audience already, which I think is quite relevant to Japan in terms of the commitment to net zero by 2050. And your views perhaps on how this will influence Japanese investment and even business decisions outside of Japan. And the third question is maybe a little bit tricky, and you can decline to answer it. But I'm curious for your views on when um, when regulators or when the market tells investors to focus on ESG considerations. To what extent might that be inconsistent? There are certainly people who argue that looking at sustainability is potentially conflicting with a fiduciary duty to maximize investment returns. And how do you, as a supervisor, think about this question and perhaps respond to the doubters? So again, sorry, 3 questions, but please feel free to address them as you wish.
Well, thank you for the full set of questions.
Sure.
All questions are very tough to answer, but I will try.
Thank you.
Well, first of all, actually I'm impressed that in Malaysia or Islam in the context of Islamic finance, the exclusion is the first step that the ESG was embraced. In the case of Japan, it's a bit different. From 2014 to 2018, the ESG investment in Japan growth 300% annually. So it's a big increase. But it is mainly driven by ESG integration and engagement, and especially engagement. The Japan's practice of ESG investment is centered on the engagement, and that is closely related with the initiative that Japan FSA has taken in the context of corporate governance reform in Japan. Japan FSA has introduced the Corporate Governance Code and the Stewardship Code. And the Stewardship Code clearly stipulates that the institutional investors should look into the business prospects of the listed companies or investee companies and to engage with them for fulfilling the stewardship responsibility. A stewardship responsibility means that the enhancing the value of the assets managed by the institutional investor. So it's certainly helped develop the ESG market in Japan in light of the engagement activities. So at the end of the engagement process, there may be a certain divestment involved, but the many Japanese institutional investors approach to ESG is first engage with the company so that they would improve their strategy or risk management, and thereby enhancing the enterprise value, and that leads to the enhancing the investment value. And so, I'm happy to say that earlier this year, the stewardship code was revised, and it clarified that the stewardship responsibility certainly includes the consideration of sustainability. We mentioned that the ESG element at the previous version, but the current stewardship code of Japan clearly mentions that the sustainability consideration is part of the stewardship responsibility, and I believe that it accelerates the ESG investment even further going forward. And actually, that issue is also related with your third question, that how the ESG investment can harmoniously live together with the fiduciary duty. We see that the sustainability consideration should be taken into account to the extent that it enhances the enterprise value or investment value. So in that sense, it doesn't contradict each other. And coming back to my previous remarks, that the ESG is about protecting themselves from the risks associated with sustainability issues, and in that regard, the fiduciary duty and ESG investment or stewardship responsibility can go hand in hand. And so, well, by addressing the risks, well, time horizon may be different, but in the sustainability issue, that will endanger the survival of the corporate, would require certain investors, well, take into account those issues in their investment decision, and that would protect the investment value. So that's the perspective that I have vis-a-vis fiduciary duty and ESG investment. Well, when it comes to the second question, yes, that the Prime Minister Suga earlier committed to the carbon net zero by 2050. And well, it certainly accelerates the, I think, the ESG investment in Japan from the E perspective. Well, in terms of the E element, well, even before the Prime Minister's announcement, Japan has been inactive in promoting E of ESG, especially in the context of climate change. And we're planning to embark on the well, TGIF finance strategy for achieving that the net zero commitment. Well, TGIF means the T for the transition, G for green, and I for the innovation, and F for finance. So we need to address climate change issue from the financial perspective by addressing transitioning the economy to the Paris climate goal aligned pathway, and also the greening the certain element of the economy, and also the innovating the economy, so that the net zero can be achieved by that part-time perspective. And so, well, all in all, I talked about the environment issues of ESG, but finally, I would like to say that the certain social element, well, green bond and social bond and the sustainability bond issued in Japan actually surpassed the last year's volume earlier this September. And it amounts to around 1.2 trillion yen. And well, notably, it has certain difference from the last year. It is that the social bond and the sustainable bond takes a huge share of the total issuance volume. Last year, more than half was green bonds. But this year, around 2/3 of the issuance is social bonds and sustainability bonds. So I think there's a certain shift of the focus in terms of the bond issuance, that the social element feeds into the ESG consideration among the business corporation in Japan. And I think as the COVID-19 situation continues, I believe that element will also continue, and I believe that COVID-19 certainly erodes the foundation of the businesses by destroying the certain livelihood in the region, and so certain companies are relying on such communities in operating their businesses. So addressing those issues is a very much key to the ESG in the context of COVID-19, and I'm very encouraged by the recent trends of the sustainability-related bond issuance in Japan.
Okay, thank you so much, and really appreciate the extremely comprehensive and multifaceted answer as well. One point I'd like to just emphasize from your remarks is on the net zero pledge, and this is actually quite an encouraging sign, at least for me personally, because one thing I think we've been worrying about this year, especially with the focus on the pandemic. I mean, it's been a good thing that there's been more focus on social and the social part of sustainability. That's great, things like employment, livelihoods, and so forth. But I think there was a worry, certainly in the kind of climate community, that that the green aspect has been sort of put on the back burner in favor of more social development. But the fact that many leaders, including Prime Minister Suga, are coming out with net zero pledges at an extremely high level is actually quite encouraging. And that will obviously require some significant, not only action, reforms, investment, divestment, perhaps, by the financial industry. Okay, well, thank you very much, Satoshi-san. And one thing I'd like to go back to now is this question of disclosure, which I think is a very pertinent topic at the moment. We are seeing many initiatives to increase disclosure and make improved disclosure, not only at a global standards level by NGOs and multinational organizations, but also at the regulatory level, and also at the exchange level. So Grace, I'd like to ask you about your experience with this. So I know Hong Kong Exchange has ESG disclosure requirements for listed companies. Hong Kong investors, fairly or unfairly, are known as a relatively pragmatic lot, let me say. And I have to admit that I personally, sitting in Hong Kong, have sometimes heard even investors say, well, do we really need all this disclosure? Like, what does it really matter? Isn't it just kind of more costly for corporates? And so my question to you is how do you justify, how do you answer this from an exchange point of view, and also who's benefiting? Where does the support come from in the market for increased ESG disclosure at an exchange level for listed companies?
Thank you. So I often hear this as well. Why do we have to do all this disclosure? Who's going to read it, and who cares, right? But actually, as I said earlier, ESG is not a CSR really, but a way to manage a corporate risks that are in the environmental, social, or governance. So one needs to look at, for example, why are the banks coming out, with looking at the loan portfolios, and how much is it of the collaterals are stranded assets. I mean, all of these are really important in terms of managing risks. And as you said earlier about the COVID situation, and this, how it has really impacted everybody, including the supply chain, and that forced listed companies to really look at how where the supply chain and how they can make sure that business can be as usual despite pandemic. So I think all of these disclosures would be important for investors as well, because for investors, whether they continue to invest in a company would be to see how well they have managed the ESG risks, so I do see an importance of ESG data, and the demand for it will continue to grow.
Okay, thank you, Grace. And Ms. Anissa, how would you respond as well to this potential concern from corporates, but even from investors? Frankly, some investors might say, "Well, I don't need I don't need the company I'm investing in to be diverting its profits to this kind of disclosure or these kinds of activities. I'm just looking for my dividend and for my returns." And how do you, as a supervisor, respond to that?
I think maximizing returns, Mushtaq, is always at the forefront of any investor. And then you try and balance it, of course, with the managing of risk. But if we take many, many steps back and look at the whole agenda of corporate sustainability And as Grace rightly pointed out, it's not about CSR. It's actually about managing the way one operates. When you look at it, sustainability, ESG, the values that's spouted in there, it's about a way of life. And at the end of the day, when that's translated into corporate earnings, bottom line, the people, planet, profit mantra, you will see it in the long run. It will pay off. But right now, I think the blinkers are on in that sense that you're seeing a very different view because you're shifting mindset. And there's always about stakeholders and boards, for example, maintaining the stand that, how do you manage return and the ROI in it versus, I think I saw a question just now on where do you make impact. And I think that's where impact investment is slowly coming up as a theme where you are able to measure it. You're able to measure the good that you put to it. So I think from a disclosure perspective, and that's where Malaysia, I think in terms of its disclosure requirements, our CG monitors, elements of it have been embedded to allow investors to know it so that you can then make an informed decision and then move from there. Having information and what you do with it, that will only be manifested in terms of effectiveness when you see it translated into returns. And for the last, I think for a long period, even since Islamic, for example, or even ESG funds, you'll see it becoming more pronounced. This year alone, the MSCI linked indices and funds ESG linked funds are performing way better than the others. And that's simply because of the elements that's making up the stocks and how it's been approached. So you can see ethical investments performing better, Sharia compliant investments performing better, and therefore you then link that to the need for disclosure, because as we shift mindsets, you need to know where and how they're doing it. Sustainability, ESG value propositions cannot be in the form of CSR alone because some of them become media exercises. But what are you actually doing? Institutions are actually shifting that. I mean, this year, globally, institutions and even domestically, Malaysia, institutions are asking for intermediaries, their fund managers, to shift making decisions on assets that are reflecting this. And when that gains momentum, you will see that it becomes a way of life. And disclosure no longer is questioned, but it's a way we do because you're making it transparent for investors. You're making an informed decision that where I put my money is managed along with the risk. And that's what we have actually asked for our PLCs to do. In Malaysia, I think under the CG code, under our sustainability requirements imposed by BUSA, is the ability to slowly condition investors and and the asset managers to actually shift to that. I mean, an anecdotal evidence is you have institutions now saying, I will not put money in a property development company if that land bank is going to be going down 10 centimeters below sea level in 5 years or 10 years. Therefore, the companies will actually have to make that effort. And I think Mushtaq, you can see, I mean, we talked about climate. COVID, whilst it's brought up societal developmental needs, the air is much cleaner now because you have less business travel.
It is. It is.
So with all that, I think investors will see that returns will be manifested. Relatively, it's already seeing it. So disclosure will make that easier for investors to know why I need that. Stakeholders will understand why I need to make sure at boards we make decisions that influence their strategic decisions. I mean, one hand now we've shifted, like I said, 3/4, and that trend is globally and also in Malaysia. 3/4 of companies are reporting, but in terms of strategic decisions, I think that's slowly being embedded. We're getting there.
Okay, thank you. So unfortunately, we're almost out of time. It's gone by so quickly. So I'm just going to ask one final question, and I'm sorry I haven't prepared you for this. But I think it'd be useful for the audience and for me as well to hear each of your perspectives on what is the next step? So we have these huge net zero pledges. It's going to require some enormous, probably behavioral changes, structural reforms even. regulatory reforms from the markets in Asia. From each of your perspectives, what are the most important steps, or what is the most important step that your organization is taking to increase sustainability in the short term at the speed we need to? And maybe I'll start with Mr. Satoshi-san, since you've been kind enough to stay so long.
Well, thank you for that question, and I have to leave in 5 minutes. But I think we have experiencing the major shift in thinking of how we approach the capital market through the ESG revolution, I would say. Well, I think the sort of the thought revolution already has happened. And so I think in the next phase will be more practical period of adapting the ESG concept, which means that we get into the certain nitty-gritty things to, well, put the ESG investment in place. And that means first that the data issues and the how the exposures to the certain sustainability related risks is located. Those kind of thing is very challenging and also the daunting task, but I think it's a necessary step that we need to take. And so disclosure is one element, but I don't think that disclosure cannot fully disclose everything.
No,
And
can't solve
so
everything.
we need to be well equipped with certain capability to interpret and judge the certain lack of data to assess that the certain non-financial element of the business, corporation, and financial institution. So data and the capabilities enhancement, development is the next very important challenge. And so in that field, I don't have the answer, but we need to very much work together to cultivate this new field, and so that the region as a whole will be part for the next round of development in the capital markets in terms of
Okay.
this.
Thank you.
That's
So
my
it's
last remarks. Thank you.
yeah, it seems we're all convinced of the principles, or most of the world has, but now it's the real work begins, I suppose. Grace,
Sorry, I
if
have
you
to
could give us
leave.
some. Thank you so much, Satoshi-san. Really appreciate it. Grace, if you can give us some final thoughts, please.
Sure, thank you. So with the carbon neutrality announced by China as well, I think the demand for kind of green bonds and other kind of bonds will come out as well to help the transition. I've heard that 5.5 trillion US dollars is actually needed over the next 30 years to help China overhaul the entire energy system. And so where they're going to get that money will require kind of international as well as domestic financings in that area. Now, as my colleague in Japan just mentioned, disclosure is very important. So what the exchange we have done is we are about to launch our Sustainable and Green Exchange, which is an information platform. The idea is to provide more transparency to see where the bond proceeds have gone to and the environmental impact and societal impact that resulted from those investments. So we hope to launch that Sustainable Green Exchange information platform very soon, and which will also allow investors and issuers to continue the dialogue on how to green the financial markets with the development of hopefully more products, more than just bonds and ETFs. Thank you.
Thank you so much, Grace. And Ms. Sharif, to give you the final word, if you just can very briefly tell us about the next steps for how you're going to make the world more sustainable from your perspective. Thank you.
Okay, thanks, Mujta. I think for Malaysia, it was definitely most encouraging that our latest budget made it clear that the government is prioritizing sustainability. We will focus on sustainable practices, finance, and also climate change mitigation. I think we had areas in there that we will also be looking at both green and social. So this is definitely the commitment Malaysian government is working to. But I also want to pick up on what Satoshi-san said just now, that data and capabilities are really essential. And I think this is where for SC Malaysia, it's about using the current frameworks and building more on it, enabling and facilitating, because there is a need to future-proof the corporates in terms of how they address ESG concerns. And this is where we work on a concerted effort. It cannot be just one component or one building block. It is a concerted effort. And I think that's where we've been pretty successful over the last many years. And I think that will continue. And that's the way I see it moving. It's a sum of many parts.
Thank you. Yes, absolutely. And I'm sorry we're out of time, but thank you both. And thanks to Satoshi-san, who unfortunately had to leave us a little early, for your wonderful insights and for your time and expertise. We really appreciate it. I hope the audience did as well. Thanks, everyone, for your attention, and have a great day. I'll hand it back to the MC.
Thank you.
Thank you for that. Thank you.
Thank you to Mr. Mushtaq and all the panelists. We will be taking a short break and we'll be back here 11 a.m. Malaysian time. In the meantime, if you haven't visited the virtual exhibition, please do so. Our session at 11 a.m. is going to be a very interesting panel session. The topic is corporate leadership for the ASEAN we want. So we'll see you in about 30 minutes. Thank you.